I'll start off by saying I had quite mixed feelings about doing this panel today. Fraud being could be quite a heavy topic. And on Wednesday afternoon, we had a company event with one of our partners, and we were standing outside on the balcony. Kian was next to me, CEO of Stitch, and Priyan, our head of customer solutions. And we had a Heineken in the hand, looked at Table Mountain, and Kian asked me, so how are you feeling about the panel? And I complained a bit. I said, it's a heavy topic, and some people might find it boring. And Kian, in his upbeat mode, immediately sprung up and said, "Bro, fraud is sexy." and it got quiet for a while, and Priyan, sitting next to me, just came in strong, and he said, "I think what Kian meant to say is that the solution to fraud can be sexy." So luckily, as moderator today, I can transfer the expectation of making this a sexy discussion to our panelists. I did agree I agreed with Hannes that if the audience looks a bit out of it today, he'll put on those sunglasses he wore at CryptoFest. I think a lot of speakers have spoken a bit about this today in our chats, and I think the first thing that I want to start with is I think it's very clear the importance fraud plays in the payment space. Some of the figures we had earlier, Kian spoke about it. Last year, there were around 500 million rands in the payment space. I think they're estimated globally to be around 10 to 20 billion dollars a year. So I don't think today we really need to go into to that, and I think it's already been emphasized. I think what I'd like to focus on today, and sitting with a panel here from diverse industries, crypto, telco space, platforms that serve specific areas of fraud detection within the onboarding process in the financial ecosystem is really focusing on, firstly, what is fraud and why does it exist? Is it as simple as saying we should optimize around having zero fraud? And then from there on, I'd like to dive into a bit about the perceptions of fraud in the industry, and just the types of fraud that some of the gentlemen and the companies that they represent have seen in the industry so far. And then like to specifically focus around the solution area, focusing on trust, user trust, and then how does businesses actually build trust in their users that they can allow them to freely operate on their platform. And lastly, I think a lot of people might have those questions in the audience, like how do you build partnerships in this space? How do you think about it, etc. So I think starting off with just, what is fraud? One thing is clear is that the reason fraud exists is because of policy. And there's two reasons for that. Firstly, by definition, we define what crime is, right? So in our policies, government, businesses, that's the first thing that exists. Is very clear, crime is defined by us. But secondly, fraud exists by design. Fraudsters use the processes that we offer them to decide how would they jippo a system to make money out of it. How do they break trust in the system? And I think a person that I would want to start with, Sipho, today, and just to highlight how design plays an impact in fraud is, Sipho, before he joined MTN, he headed up a big part of Nedbank's mission to start and build their first app, the internet banking app. And yesterday we had a discussion, and he spoke about how in the beginning they just saw zero fraud, and that was because of the process. And then how that started changing as users' expectation about a more seamless process started changing. So Sipho, maybe speak a bit about this, what your experience was in the beginning. You spoke about the branch requirements, and then how that evolved over time, and how the loop started emerging, and how you dealt with that.
Yeah, no, absolutely. I think fraud is always a kind of it's not too sexy, but we have to do it, right? So if any Nedbank clients are here, you might remember that when we started our internet or our online journey perspective, we could not give you a set of credentials to access that without seeing you. So you had to go to the branch to fetch that, right? So which was a big part of our security. But as digital and commerce grew, people had the expectation to be like, I want to start using internet banking, but I want to do it from the comfort of where I am. And so we could not send people to branches anymore. Now someone has to create these credentials at home, and we have to make sure we trust them, right? So we went on this huge journey of creating a new digital identity first, and we incorporated a lot of identity verification partners to build with that, right? And the most important thing, and I think most of the guys would know that the credentials you create are as strong as how you created them. So if I'm just putting in a username and a password, and I'm doing a out of band with an email, that's something that can be social engineered very easily, right? Whereas in the past, if you go to the branch, I can't fake being Dewald, right? They have my ID book, they can see me, and that's the only time I get those credentials. I know Capitec is still doing it like that, but that was the first part of securing our journeys. And I think in the second part where we were allowing a lot of these people now to create this remotely is where we started really struggling with a bit of fraud on our side. And I think we started introducing more tech-heavy solutions, and finding the balance between good customer experience and security has always been a battle. To talk to designers, like one of the guys was saying there, to say no, he has to go through all these steps, otherwise they can't do anything. And them coming back to tell us that you are just an enabler, right? You're not the means to an end. You know, people are not here to create an identity; they're here to buy something or pay. And yeah, it's been a bit of a tough one, but slowly but surely, there are experiences that different tech companies are building to make the customer experience much easier and much more secure as well.
Awesome, thanks, Sipho. I think it's clear, like, and Mark spoke about this as well. You know, the future of payments is optionality, and part of that is having a more frictionless process. But there's an opportunity cost to that, and I want to focus a bit on this design element. I think there's a lot of perceptions out in the industry around where fraud is more prevalent, and often the type of products that we offer is like the first place one should start, because that's where users' expectation starts. Dustin, we spoke about this yesterday a bit, and I think what would be super useful is tell us a bit more what we're actually seeing in the industry. Where are fraud more prevalent? Which product types? And what are the different perceptions? Sean, we spoke about this as well yesterday. There's this perception that, for instance, crypto is fraudulent. There's more fraud there. But I think, Dustin, the information you shared...
Why do you have two of us on this panel? I mean, we're not invited to any of the other panel topics, but just this one.
Dustin, maybe you can touch on that.
Yeah, absolutely. So, I mean, I think we as Smile are in quite a fortunate position because we operate with a lot of the sort of fastest growing digital businesses that require verification in terms of either regulated KYC or for fraud prevention. So, and we do that across the whole of Africa. So we've probably processed over 30 million KYC checks, and we've got all that data to kind of see where the fraud exists, whether it be in certain industries and what type of fraud that is. The perception of most people is the crypto space is wrought with fraud, right? Whereas when we look at our data, the crypto space actually experiences less fraud than average, which is fascinating for me. I mean, when we saw that stats, it's fascinating. But when you think about it, it actually makes total sense. Because where the big buckets of fraud sit is in industries like buy now, pay later, or lending, and that type of thing, right? Because someone's trying to spoof your digital KYC solution, they're going to try and do that for significant reward, right? So that's the one thing, just in terms of industry. But then, like the type of fraud that we see, by far more, just about half of the fraud attempts that we see are super unsophisticated. So it's literally someone's stolen your ID number or your ID book, and then they're trying to use their face to log on to that. And typically that's getting caught fairly easily. But people are just trying to access that in a very unsophisticated manner, right? And typically you wouldn't expect your kind of high-end money launderers to be using that type of an approach, right? They're gonna be a little bit more sophisticated in their attempts. And then that kind of, it goes further down into a more sophisticated state. So then someone will try and replicate the face of the ID that they've stolen, right? And they'll try and take photos or masks or cardboard cutouts and things like that, and try and use those to onboard. And that kind of goes further out. And then far more sophisticated becomes things like deep fakes and that type of thing. But like, it's so small in terms of what we see currently. I think it's coming, right? And it will be more prevalent today. But it's kind of, in terms of the African context at least, it's less than 1% of the fraud attempts that we're seeing. Then there's things like poisoning databases or sources of truth, where you actually, if your source of truth that you're verifying against becomes poisoned, that's a very big risk, right? Because then in theory, you're doing everything you can as a fintech or crypto business or whatever to verify that person, and you're verifying against that source of truth. But if that source of truth is wrong, that's huge, right? So we see a lot of like duplicate fraud across poison databases that we have to fight against.
Just a last follow-up question on that before I want to move to Sean. You mentioned poison databases. A lot of businesses in South Africa use, for instance, DHA as a source of truth. Are there holes there? What's your view on that? Is it fully trustworthy? Are there sometimes things that you pick up that you have to follow up with? And I think it's also part of your product offering, Dustin.
It is a serious question. Look, I mean, I think the bottom line is there's holes everywhere, right? There's always, whether it be by mistake or through nefarious activity. But for us, there are ways that you can mitigate against those types of things. And you need to be sure that your KYC process, right, whether you're doing it by yourself internally or with a partner, that they're catering for those types of things, right? And I'll talk a little bit about it a little bit later this afternoon as to how you can go about mitigating against things like that. But they exist and they evolve every day, right? So fraudsters are getting more and more sophisticated. They're finding new and interesting ways to spoof applications, and you have to constantly evolve your techniques to mitigate against those things.
Awesome, thanks, Dustin. Sean, I want to move to you. We spoke about this briefly yesterday and thinking about how do you categorize fraud in terms of you've got people that are trying to access your platform that you want there, that you don't want there, but you also have to protect your users from people that wants to like use them to get access to the platform. You've had numerous years of experience in this industry. Tell us a bit about like how you think about that in terms of categorization of these different types of fraud, and especially with a platform like VALR.
Thanks very much for that question. So I think what's interesting for me is that, I've been involved in different online industries, and to your point, is that the very first one that I was deeply involved in was online lending. So we would lend to individuals, and then obviously moving further across into the VALR environment, where we were creating an environment for people to store and create wealth and an exchange, and fundamentally be an exchange. And in those two businesses, you have a very different focus of the fraud. Because fraud is, to whom is the person committing the fraud harming? Who are they harming? In the context of the lending business, they're harming us as the business because you're lending to someone incorrectly. So they're trying to steal from you, or they're trying to access and have an ability to have a quick gain. They want to gain the loan and then disappear effectively and never repay in this context. So you as a business face the risk effectively. In that context, you can set those parameters yourself about how risk tolerant are you. Are you okay to lose a couple? So you can be a lot more risk tolerant in an environment where you are effectively the person taking the risk. In a retailer, in these kind of environments as well, I mean, you're risking the context of losing that particular sale or the transaction. When it comes to the crypto space or the exchange space, we actually are protecting the user. The user has to be protected in this context. We want to protect them against someone stealing their account details, or someone hacking them, or someone phishing into them, or the context of them using the platform in a way which is being, in effect, they've been taken consideration. So in that context, you have to be super vigilant, because your onus is actually onto somebody else. So you're almost more vigilant in the type of businesses that you're in. So I often see there's a scale of business, and you can deal with fraud in a different way in each of those businesses. But for us, fundamentally, when we look at fraud, there's two elements to it. If you want a user experience to flow, as we all said, you want a user to come onto the platform to transact, and you want to do great customer acquisition. Now, you can know that the point of danger for that person is at certain levels. So if someone comes on and they start transacting with a deposit, then do you need to have the whole KYC process completed until that point? But perhaps only at the time when they withdraw are you as an organization at risk. If they deposit 100 Rand or they deposit 100,000 Rand, are there different issues of your organization dealing with a suspicious transaction? So you can, very often organizations set their parameters as one standard flow for regardless of who the transaction is. We've become a lot more granular in this context, and a lot more data-driven to understand where the risk processes are, to match a user journey with the risk that they faced on that journey. It means much more data, much more analytics, much more customer focus, but always with the aim is to make sure you minimize the risk of that individual customer that you're dealing with.
Thanks, Sean. Super interesting. I think given the bit of a landscape that all three of you pictured in a bit, I think, Hannes, want to move over to you. Binance, launched recently in South Africa. You're a global company that have built, enormous database and understanding how people interact with a platform like crypto. You've got a good sense of where the different loops are. Coming into South Africa, new market, how do you think about fraud? What was your view in the beginning, and how are you starting to see that roll out as you start maturing in this market?
I think as the new kid on the block, we've seen a lot of this in other countries. So to Sean's point, you kind of iterate to a point where we can then replicate in South Africa. And a lot of the stuff we see in South Africa is unsophisticated. So it's not new to us. We can protect our customers from the outset. A lot of it goes to our partners at Smile, and that works well. But yeah, it's a kind of thing, the bigger the organization, the more it's a case of we've seen a lot of this before, and you can kind of block it early on. So I think in our instance, the rates are very low, and yeah, long may it be so.
Awesome. I want to move a bit to moving away from the types of fraud, moving a bit to like the fundamental component trust plays in this whole game. Sean, you spoke a bit, you touched a bit on that, and I think two areas where we can break this down. One is there's a user trust that needs to be built up. I as a user needs to be comfortable that the platform that I'm operating on, there's certain controls in place. Secondly, there's the business side of it. And I'd like to dive into that as well. As a business, you need to build a certain level of trust in your user that you can allow them to operate in a certain way in your platform. Sean, you spoke about the certain areas that you want to do that in the journey. I want to start on the user side. I think from our experience, what we've seen at Stitch, there's a lot of perception that plays a role in terms of people's comfortability interacting with the platform. I guess the easiest example of this is people have a certain perception when it comes to quality and products based on interesting ideas. Like a good example would be non-related to the fintech space. Junaid, our CPO, and myself, we've got this ongoing bet. I can come from Robertson with certain levels of wine, and we always have this bet saying, he says it's no possibility that a bottle of 400 Rand of wine would be better than a bottle of 150 Rand wine. That bet is still ongoing, and I firmly believe a bottle of 150 Rand wine can have a better quality. Moving that to this space is when a user interacts with a platform, there's this level of trust that you get from going through the loops yourself. So want to specifically point to you on that, Sean, is like, you spoke about this, you've got a certain quality and there's a certain level of trust that builds up. It might add more friction, but it builds that trust that people are more willing to interact with your platform.
Yeah, look, I think it's very much to do with the business that you're in, because ultimately consumers use your service and they feel as they go through the KYC process, they feel how secure your service might be. I mean, they actually experience for themselves, so they think how other people may. So when you're a platform like ours, where you're wanting people to deposit hundreds of thousands of rands, you need to have a certain quality of that KYC and that fraud detection process built into it. So it can't be that easy. I mean, if it was very super easy to go through our process, all of you would consider, well, hang on a second, that was a bit easy. You know, can someone else perhaps do it? I mean, I remember the first time I used, because we're with your conference today, when I used instant EFT. Now, I received like 17 messages from my bank telling me never to do this, right? So I went in and I thought, okay, I'm going to buy from this thing, and I put in a username and my password, and it went, right? And suddenly my bank was being accessed, and I thought, oh my goodness, this is what's happening here. And it was, the level of trust for me came through using it, having the integration with the bank, so there's a trusted partner, so the messages came up. But then my experience got better as the product was used with other brands. So when I would go and I'd see it on Takealot, or I'd see it on, as soon as other brands started utilizing the service, and there was a sense, well, oh, that company must have done some DD on this infrastructure. Surely they wouldn't be giving me a service which is susceptible to fraud. So in the context of that is that the trust is built by the partnerships, by the brands, by building a whole lot of stuff over time, and dealing with fraud in the public space, because you often have to deal with this. You have to deal with issues in both ways. So it's very, very much the thing of, I really believe that if you do have a light KYC process, your customers will not use your process for significant amounts of money. They'll use it for small elements of money where they are risk-free. But as you have a reasonable amount, the customer can determine that for themselves. But it's important to build it, and build it with that customer over time.
Yeah, go for it.
Yeah, I mean, I 100% agree, right? Your KYC needs to be robust, but it also needs to work, right? So the problem you'll have is there's competitors in the market. Someone tries to, they want to put their hundreds of thousands of dollars into VALR, for example. They come on and their KYC doesn't work for no reason other than it's a poor solution, right? Not because they're a fraudulent user or anything like that. That person's going to go straight to the next platform, and if that one works, that's where their loyalty lies, and that's key for me.
Your stuff can't break. It can't break in any way of that process. If it breaks, they just lose all confidence.
I just think there's a future opportunity as well, and I think bear with me, it's set like a crypto bro, but a lot of ID can be tokenized in future. We're going to get to a point where your virtual identity will be something that can be stored on a secure blockchain, and it can be exchanged with parties. At this stage, you've got what you've got in your backpack, you've got your ID, it's all a PDF format, it's very unreliable, it's easily replicable. That type of stuff can be securely stored, and in future we can share it with each other, and that can take very quickly. So, may put you out of a job, but we can talk about that. But no, that type of stuff will be, I mean, what these guys do well is they have a secure link into the DHA, etc., and that works well. The DHA becomes your trusted source. But I think that type of things, like all things crypto and blockchain, will be decentralized in future, and that's better for all of us. And I think that's the type of standard we want to get to eventually.
Yeah. Thanks, Hannes. I want to, anything to add?
Just, I think also how your brand is positioned. I mean, at MTN, I think the most difficult thing for us to do is get someone to store their card on MTN. As much security as we do have, but they don't see us as a bank. So leaving my card on there and MTN is just a telco is one of the most difficult things to build that user trust. So where your brand is at as well, and how you want to position, how you secure your customers is also pivotal to them adopting the solution and just trusting you with their money.
Yeah, I think we've gone through these learning curves at Stitch as well. Seeing our components like UI, the words you use when it comes to a payment method impacts the way clients interact with the payment method is massive. Our marketing team actually spends a lot of time when we integrate a new client, we spend time understanding their client base and to understand what is the best way to talk about a method to start building that level of trust. And at the end of the day, it has a massive impact on your conversion rates as you see people actually willing to go into that first step, Sean, that you mentioned, Dustin mentioned as well. I want to move to the business side. So we spoke a bit about the user. On the business side, one of the biggest things is building trust with your user. The more you can trust your user, the more you can freely allow them to start operating on your platform. You need to build that level of data over time. And I think there's an inherent trade-off here. And a lot of businesses almost front load that cost. So you go through a very deep KYC process. You make sure the user has got all elements checked. And then you have like, I've got relatively good trust that this person can go through the process. Sean, you mentioned in some cases what you guys do is some people skip certain steps, but then you limit them to do certain items like withdrawals, and slowly they can build up that type of a risk profile that you require to be able to allow them. Dustin, on your side, how should businesses think about this trade-off when it comes to that acquisition cost, front-loading that cost, potentially losing a lot of users because they're going to go through that deep process versus making it a bit more relaxed, but then over time building up that profile?
Well, I mean, I think first and foremost, you have to operate within the constraints of what regulation is requiring of you, right? But within that, you have flexibility. And we always advise flexibility, like exactly what Sean said, right? First, you're a business first and foremost, and you need to attract customers to your platform. If you add unnecessary friction, people are going to drop off and they're going to go elsewhere. So reduce that. I mean, we try and make our client's ability to integrate our system as flexible as possible, right? So we give them options so that they can create the flow and the journey that makes the most sense to their business. And we always advise them to do it that way, right? We give them the tools to cater for the most robust KYC verification in terms of the regulation in whatever industry or whatever geography they're operating in. But we give them flexibility about how they do that. And I think that's key.
Awesome. I think one item I'll add from our side, what we've seen, especially serving wallet players in the market, is this whole inherent capability of being able to link a bank account or payment method with somebody's identity. And one of our products, or the flagship product, and Kian has spoken about it earlier, and we'll speak a bit about it later today, is where when users want to link a specific bank account, with that linking a bank account, there's also that cross-verification that happens by matching up the ID number attached to that account holder with the profile ID number. And that, in a sense, we've seen has created a lot of confidence, at least with the businesses, to know that the people transacting on their platform are the ones that actually say who they are. What that does result in is obviously you don't have people linking multiple different accounts for different people and one family doing like adding different communities to it, but the value of it in terms of the benefits from a fraud prevention mechanism has been immense, what we've seen especially in spaces like crypto. I think last thing before I move on and on to just on the solutioning side and how to think about this intrinsically about businesses, how to handle this conflict that you have and having a seamless process and still having having a certain conversion rate when it comes to getting people onto your platform is when it comes to user education. Hannes, I know Binance has spent millions and millions of dollars on this element. Sean, we also spoke about that in terms of VALR. Tell us a bit about more your approach there and why Binance have invested all of this money into this component globally and also doing so now in South Africa.
I think most users, Dewald, now understand that once your identity gets duplicated, it's lost. Because then there's someone else and they're going to ride it far harder than you ride it. So that's just the way it works. So our education in that sense, I think, pivots around the fact that you should always focus on the secure channel. We all get a lot of dodgy SMSs, dodgy emails saying, just click on this link and service provider or A or company B it's a direct link into this, and we all know it's spam. So we always say to people, use the 2FA and make sure you use the official platform. Never use a link in that type of stuff. So, but I think a lot of users, and we're early in the process, early on the adoption curve, are still relatively naive, and that's just because they've not either been educated or not been frauded. And we prefer to educate before someone gets defrauded, and I think everybody in this room wants to do that. So it's just a case of be careful. Use the official channel and make sure you use only the official channel. I think otherwise, but educate before you take someone on board. It's almost, on some of our high-risk products, we even give users a quick test to say that, so you're going to trade derivative, are you really ready for this? The same type of thing goes for your identity, where you need to make sure you know exactly how to protect that. Because yes, we can protect it. We've got a fund that helps users should, for whatever reason we fail, that I think almost never happens, but in the case that people do get defrauded, there's always interception. It's never on the platform, and it's the interception bit that people need to get educated on.
Sean?
Yeah, I can add a bit to that. So you said some of this was sexy. It hasn't been that sexy so far, right? So,
Please help, Sean.
So I'll give you guys some of the like real life examples we deal with. So it's education. I can't tell you how unbelievably important it is in the VALR context, right? So we have a whole team of people who spend their lives looking at all the social media channels to try and find the scams. So their job is to actually be part of these pyramid schemes and these get quick rich schemes and buy crypto and make all this money. So they all go to these programs, they sign up for these programs, and we figure out what the mobile number is that you're supposed to use in these things to communicate with a person or get more information or email stuff. And then we take these numbers and we put them into our databases as blocked numbers to be able to send messages to or to receive from. So it's like a very offline process. And we can't tell you how unsophisticated these scammers are, because they create these and they use the same number every single time. They recreate the schemes, but they don't change their own fundamental details. So we've got this team doing this. Another part of it is, when I don't know if you guys have ever watched the videos of fraudulent KYC attempts. So as the user goes on, the video switches on, the person is standing there, and they're getting their face in the photograph and they go forward. And then we see ones that obviously get flagged, and we go and have a look, and there's like two people in the video. Someone's like helping them move their head to the right place, standing there next to them. And you can watch us for 30 seconds of this dance between these two people. And we do that with things like checking if there's ID numbers for people above the age of 60 that register on our platform to buy crypto in this context. So we start realizing that there's certain, all in South Africa, please, just one thing. We're all dealing with this huge crisis of mule accounts in South Africa. I mean, I think we can talk openly about the real problems that are out there. So a mule account is that we have a huge amount of people who are quite happy to give their ID book and their credentials to anybody else who's willing to use it. And that's very difficult to catch as an organization if you use it, because someone went through the ID, they went through the process, they registered on the platform, they've done everything correctly, right? And these systems we all talk about today don't catch that person. What catches them is then when a criminal uses them to transmit 100,000 Rand or or 1 million. So we have to have this check between saying, okay, here's a guy came onto the account. We would check in the context of how wealthy, what is their RTC score, what are they, what can we expect this person's transaction value to be? And when it comes on and it's outside of those parameters, it just sets off a delay, a 24-hour delay, and our guys can investigate it. So what I'm trying to talk through here is that it's much, much more than just process. It's in your organization's culture to have a deep, deep culture in your system to try and protect your users as much as you possibly can.
Fascinating. Interesting. I think on that, what I'd like to move on to now, and I know like I need to watch time here, and I want to open it up to the audience as well. When it comes to making these decisions, you've designed your product. Sipho, you and the team have developed various new online products, and MTN is on this rapid mission to digitize and continuously innovate around your approach and value propositions. You and the team will design a product, but now you need to stress test this. And you're going to have a fraud department there that will give you feedback and poke holes in it, and now you need to handle this healthy conflict internally to make a decision. What risk are we happy to take here? Tell us a bit about that, and like how do you handle those discussions?
Yeah. So luckily the team has me. so how we really design all these processes is we look at all their tech vectors, whatever process it is, whether I'm taking up a new device or I just want to store a payment mechanism on one of our portals. We run through a threat model, right? So I would lead that with a couple of the team members and the designers, right, to say, this is where we must protect it, this is what we must do. And the designers will find a way to then now, how do we shape this in a way that it translates easily for the user to use on our front ends? And then by the time we have agreed, right, to say, okay, this is as much friction as we'll take, this is as much friction as we think the customer has enough appetite for, then we'll take it to our security department for them to, again, kind of look at it, okay, cool, all the holes that have been poked. Technically, they look at other stuff as well, which I'm not privy to as well, but all in how we're going to code the solution. And then we go to the fraud department. And normally those discussions end up just in more requirements, right? I want to be able to see this, I want to be able to see that, not necessarily how we've designed the solution. They just want transparency as to how data and stuff like that would feed through so that they can have real-time control over something where they'd feel it's fraudulent. Can I stop it now? Can I see it now? And yeah, it's been working pretty well. But I think without that first leg of having someone really building those threat models and understanding where their tech vectors are, and obviously it changes every time because these fraudsters get smarter. You block this side, they start learning new stuff this side. So we evolve with that, but I think the primary place to design is within our digital team, as securely as you can there, before we take it through to our fraud or our security team. And again, there's some stuff they would fight us about, but I'll have my designers there as well to say, but from an experience perspective, this is what we need. Although we know we're reducing some of the friction, but this is what it will give us. And it's a healthy debate, a healthy conversation, but with all three kind of teams in the room, our solutions are robust and easy enough for our clients to use.
Awesome. What's been highlighted across this discussion for me is this trade-off. Like, you can go all the way to the spectrum of having zero fraud, right? But the customer experience is gone. Your innovation, Sipho, and your civil discussions in those boardrooms will be gone. Mm-hmm. So it's about identifying the level of fraud that you're happy to take with, having it as a cost line, a line item, and then starting to iterate around that. Just want to open it up to the audience. I know there's players from across the different industries, payment space here, just in terms of general questions around this for the panelists.
Hi there, Hendrik Deploy from DRS. Sorry, thanks very much for the invite for this. The one thing I want to ask is, you haven't addressed the other side of the coin, know your employee. The biggest risk is actually your employee. How do you handle that? And then the other thing is there appetite amongst the players, and maybe Stitch could be part of this, in a whitelisting type scenario or grey listing type scenario, where if you encounter fraud on your side, can you share that information, subject to POPI or GDPR? And then the other thing is compromises. If you are compromised, what is the willingness or the time it takes to share that information with your third parties? To say, listen, we've been compromised, please watch out for this.
Awesome. I'm going to throw the first question to Hannes. We had a discussion about the employee side yesterday.
Yeah.
Hannes was head of HSBC before joining Binance, and I think there's a lot of lessons learned in that space.
Yeah, and I think if it's whether it's crypto or traditional finance, the no employee thing, this is human. So it doesn't matter which industry it is, it's a human thing. I think in the first instance, you got to determine that significant amount in your business. What is a significant amount for you to lose? And that becomes your threshold. So Anything under that, automate it. I would say set up your, what they used to call standard settlement instructions correctly. So if your counterparty instructions are set up correctly, any payment under that significant amount, let it go through. Your business got to function. Otherwise, you can't have a maker checker function and everything. Above that, I would say I have a more stringent next level of maker checker function. So let's say your amount is 100,000, 120,000 payment. Let a second person sign it off. So that's the first thing. I also think there's a psychological element to it that as a business owner, read the room, read your people, know their background. People go through difficult times, we all do. And sometimes these are financial, sometimes these are family. But people, there's temptation, you know. And if you know someone's going through a difficult time, I won't say pull them off the payment platform, but just speak to them, see what they need, see what you can do for them, make them comfortable. Otherwise, you know, he or she may just go astray and you need that 100,000 that you've got access to because you've got access to the bank account, and then people can hit you and they can leave. So just keep an eye on your employees. Body language is a very revealing thing. Keep an eye on them and just, you know, support where you can. Some of these things can be caught and then, you know, the temptation is not there from the outset. So, yeah.
Question. Just the second question, third question. Yeah.
I can talk to the one about you talked about whitelisting, grey listing, the services. So it's very good in our industry, specifically in the crypto blockchain industry, as we deal with wallets. And wallets, we have a very, very sophisticated approach where we all use, we use chain analytics. I think Binance does as well. We're instantly reporting accounts or wallet addresses that have fraudulent behavior with them, and we all immediately use them. So we have a very efficient way in our crypto ecosystem to identify bad actors extremely quickly. Of course, people can open wallets extremely quickly as well, so this is this constant race. But often people will use the same wallet when they're involved in one scheme and the other. They often use the same address, which is a bit silly. So other your questions around how quick for us to respond? You're talking about responding to the client or responding to an industry body or responding to... Yeah, so the ecosystem which is amazing in the crypto ecosystem is, because it is ultimately an open platform, it's all open source. A lot of the accounts, you guys would have seen this, if there are hacks, if there are attempts, if there are break-ins, the market is saturated. Immediately information gets disseminated across all the nodes. So of all of the industries, the information is really disseminated as fast as possible. It's very much a community-driven program. If you want to address the other last issue. But the one thing about trust, I want to just go quickly back to that trust. One thing we realized very, very fast in the industry is that when someone deposits money into your platform and they hit that pay button, the sooner as possible that they can receive that verification in their wallet that the money has been deposited, the shorter that time span, the greater the confidence of trusting your customer. The same case, when they hit withdrawal and it is instantly available in their bank account, they get a ping from their bank account literally within seconds, that your level of trust is exceptionally high. So that's why for us, from a payment platform point of view, it's absolutely critical that as you go live from a trust point of view, your payment platforms are working highly, highly efficiently. It's probably the most important thing in the trust.
One quick comment on that, exactly that. So for every step of the payment journey, tell your customer where the money is until they receive the product. Something we've done quite well with Stitch is once you make the deposit, okay, your money is here now. Now it's going to clear, now it's there, now you can buy crypto. So there must never be this grey period where people think, shucks, where's my money? It's left my account, it's not yet in my wallet, where is it? You know, that doubt, that's the deadly thing.
Yeah, can I just speak to the grey list issue again? I mean, I think, so once again, we're quite uniquely placed in that we operate across many different industries and with significant volume. And because we're a data processor, it's challenging to create any list like that in terms of personal identifiable information. But what we do is we're an AI business, a biometric business, so we can do that on the face, right? And we can do that in an encrypted way. And so we've got an anti-fraud product which we're building out. We currently have like a deduplication product which looks at all faces that are onboarded with a current customer. And there's very much a vision towards taking that to a more sort of watch list type of approach, whereby any of our customers that want to opt into that can then say, okay, well, this person's face logged in fraudulently into this other client, they're flagged. So you need to know that that's a known fraudster. So absolutely, and I think other companies will do the same.
Just to the guys, to VALR and Binance, what do you think Solana could have done differently to make sure that what happened to them didn't happen? And if you were working for them at the time, what would you have implemented differently?
I'm not particularly au fait with that scenario, I must be honest. But let me give you an answer to something that happened with us recently, Open Yourselves. I think everybody knows we were hacked 10 days ago, and it was, well, a couple of things. I think firstly, yes, the hack happened, and it happened, but it didn't happen to any customer account. And I think that's always a great starting point. Someone accessed us via the BNB chain and then started minting BNB coins. Now, not a great thing, but the fortunate thing with coins is they can be minted, but they can be burned as well. So you can cancel them afterwards to the point where they haven't been exchanged. What this individual did, they took it very quickly from the exchange onto, I think it was one of the DeFi platforms, and borrowed against it. Then you've got a problem. Then you got to wait, but it can still be reversed, but it takes longer. Lessons learned there is when you have an open ecosystem, and I think this speaks to the Solana point, is make sure you understand all the entry points, and you know there's a lot of devs working on these things. Make sure your barriers are up. Other thing is that we do is 10% of all commissions, and for us that's a big number, go into a fund that when customers need to be made whole, they get made whole. So there's a big reserve created for this, and I think for any business that deal in Iris products, it's not a bad thing to have. So you can decide what the level is for that and what's appropriate, but I think 10% is a good number.
Look, there's a long answer to that question. I'm not sure we're going to deal with it here. The one good piece, which is also what Henrik mentioned, is that most of these hacks occur when there is a reference to a third party, especially an Oracle. So if your smart contracts and your environments are all in one, that tends to be okay. But these bridges are where most of the issues are occurring. So when you build your business, just be very sure that the platform, even if you build it on any of the ones, it's irrelevant which one in this context, the more external oracles you use to validate your that's where the transaction issues are. So, but there's a much longer question. We can't do that on this forum.
Tariq, say one last question. Yep.
So my question is for the crypto pros and Smile Identity. So what I've noticed is when you go through the KYC flow to get your account verified, the source of truth that is used is most of the time the Department of Home Affairs, and you just compare the ID number and the name. And I think I want to know, why don't you use the credit bureau as well? Like, ask questions like, do you have an MTN contract? Do you have an account with TFG, just maybe as an extra layer of security as well, in case maybe the Department of Home Affairs information is poisoned, as you mentioned. So, yeah.
Okay, now good question, and I think Dustin needs to give their side as well, as because I say they are service provider and does a good job at it. But there's a public and a private element to this. So DHA is public. To one of the points made earlier, it's every database has got what Dewald call poison in it, so you need to determine what it is. But again, these guys do a great job in terms of that verification. Credit rating agencies are created for a different reason, and their base layer is basically your ability to repay debt. Whereas they're not there to verify identity, and I don't think it's commercially and morally correct to use them to verify identity. I think it's the right thing to use them to verify your ability to repay that debt, and your can I say your track record in the past to have repaid debt when you had to. But yeah, I remember they've also been hacked. I think both the big ones have been hacked in the last 18 months, so that a lot of that data is out there as well. So again, to the point of bridges and how you lose data is an important point, but I think for now we like to stick with the golden source, and the golden source for identity is still the DHA.
Yeah, I mean, 100%. And I think we've predominantly focused on identifying the consumer, and that is the golden source. Is it sometimes poisoned? Yes, but we've got measures we put in place to mitigate against that, and we believe we can effectively do that. But having said that, a lot of our clients use our solution just in terms of doing a biometric and verifying against the Department of Home Affairs as just one of many different verification mechanisms that they use to build their risk score on a particular user. Right, so sometimes people may use other sources like credit bureaus or credit scores as kind of ancillary evidence to suggest, okay, well, we're comfortable with this level of risk because we've ticked all of these boxes. But I think first and foremost, if you're trying to verify someone's identity, you've got to use the golden source.
Cool. I'm gonna. There we go. I think I'm gonna stop the conversation there. I think the tricky things with any of these panels is always like you just open up the whole, and there's so many different areas that you can go in. I think every one of you could get a bit of a sense of the different areas that especially everyone on this panel have covered so far, and we've got a lunch break now where you can dive into more detail if you can corner them. Just want to say, Hannes, Dustin, Sean, Sipho, thank you so much. It's really awesome to have you here. It's been incredible to be able to work with different partners like yourself over the past couple of months, years, and really just see how wide this ecosystem is, and observing first principally the type of value that you offer to the different ecosystems and end users out there. Thanks so much, everyone.